Cleveland industrial market has continued to tighten over the past year, down to an 8.7 vacancy, down from about 10% 2 years ago. That steady decline has been due to a lot of different factors. We have continued demolition of older dysfunctional industrial buildings, as well as shale development has brought in some new players into our market. And we continue to see manufacturing with an uptick that has improved activity as well. Net absorption of 1.6 million square feet over the last quarter of our total 478 million square foot market. So things continue to tighten. Rents are starting to go up just a bit, and I think that trend will continue into the foreseeable future. New speculative development is not happening.
2013 first quarter showed positive absorption again, bringing our vacancy rate down to 7.7%. We're seeing strong build-to-suit activity in the marketplace, which should be landing in the next couple quarters. A couple of large leases were done in the first quarter of 2013. In addition, we're seeing strong demand in that 150 to 200,000 square foot range, which should help the vacancy rate in the upcoming quarters.
First quarter of 2013, we experienced positive but unique market condition. Interest rates are low, vacancy rates are low, absorption was over 2 million square feet, although just about 1 million of that came from one deal at the Ford Batavia plant with a firm called Huhtamaki. Deal velocity, unfortunately, continues to be under 20,000 square feet or over 150,000 square feet. We're still lacking in that 30 to 100,000 square foot deal size range. Demand for space continues to be strong inside the I-275 Beltway in Ohio, as well as everywhere in northern Kentucky. In all markets, there's a high demand to purchase buildings and sale prices are on the rebound. We have a building in Blue Ash that's been on the market for just about a year. We had a buyer make an offer of 60% of the asking price. We couldn't make a deal. They went out, revisited the market, now have come back, and we have the building under contract at 95% of the purchase price. Unfortunately, rental rates continue to lag. We just leased a building that was 55,000 square feet in Sharonville at an effective triple net rental rate of just under $3 a square foot with a high TI package. 3 years ago, we leased that same building at just over $3 a square foot with a very low TI package. Our recommendations for buyers and tenants are start looking for space well in advance of when you think you need it. What we're finding is that due to the political and economic uncertainties, companies are waiting to the very last minute to look for space, and it puts them at a severe disadvantage for negotiation as well as finding a suitable facility.
The industrial market in Ohio had a strong first quarter in 2013. This is coming off the heels of a strong fourth quarter in 2012. Great news for our industrial market. Overall absorption in Ohio markets totaled 4.9 million square feet. Cincinnati had about 2.1 million square feet. Columbus had about 213,000 square feet. And Cleveland had 1.6 million square feet of positive absorption. Overall vacancy rates in all markets declined and rental rates started to creep up. This is great news again for landlords and owners starting to take advantage of this market.